Hey guys, welcome back. In today's video, we are talking about the shorts covering AMC, the short-term gamma squeeze, the price target of 151, and many more in this video. First, we're taking a look at this. AMC starts moving and Yahoo immediately attributes it to something that happened a week ago. So when we take a look at this news article for why AMC was moving, as we saw, it ended up Friday up 13% and it was even higher at its obviously peak. They said it was in terms of the fact with a successful Netflix partnership that attracted over 753,000 attendees. And so you can see that they are trying to claim the reason why AMC went up was because of the fact of these partnership successes. Now, of course, these partnerships are something that is aiding to AMC's success. Ultimately, it brings in more revenue for AMC. It makes the fundamentals look better. However, a partnership like this, which we have seen happen in the past before, did not allow AMC to move up 13% in one day. Now, what is actually happening when we take a look at the overall market, like we've said, a lot of these short sellers have been affected by this recent silver price increase. We've seen how UBS, how Bank of America, how these two institutions took short positions in silver. And as they are getting affected, the margin will also be affected. The ability to suppress AMC will also be affected. And so those are very likely to be the actual reasons for why AMC went up 13%. You can even see here, once again, just to really realize how ridiculous these articles are, is because on that day, prior to AMC going up 13%, we saw an article saying AMC, the stock stinks as market gains. So they're obviously trying to make it out that as market is going up, AMC is not. Now, what they then failed to add on is the fact that AMC then went up 13%. And now we've actually seen this in the past before, just like we saw with this article, where when AMC goes up, they immediately trying to find some outdated news, whatever news it is, and most likely it's outdated, to contribute it to why AMC is going up. And the reason why they do that is because they don't want the real reason of why AMC is going up to actually be covered, because that is due to the fact that short sellers are struggling. That is due to the fact that they are lacking with liquidity. When you take a look at all of these times when AMC goes up, what you'll find is that typically is also at a time where there's extreme stress happening within the market, when certain institutions, especially the ones that are shorting AMC, are faced with massive problems. You can see AMC Pop are short ready to go long, and this is obviously talking in reference to the 13%. And when we take a look at this, you have to realize that recently institutions have been buying AMC. But not only that, another reason for why we could potentially be seeing these shorts panic, why we could be seeing this short-term gamma squeeze, is because of these calls. Typically, when you get a stock to go up 13% or just a high percentage in general, especially the fact of understanding that there are always continuous calls being bought on AMC, we talk about the possibility of it triggering a gamma squeeze. Now, this isn't to say that it's going to happen 100%. However, this is talking about the possibility that is on the table, because we have to realize is that this would typically, when you take a look at a company like AMC and its undervaluation, and you talk about the time where shorts are struggling to suppress AMC, we are supposed to be seeing AMC go up. Now, of course, we are faced with continuous difficulties because of dark pool, because of suppression, because of all of these naked shorts. So whether or not we will actually be allowed to see real price action happen for AMC within the next few days as the market starts again on Monday, that is still to obviously be determined. But if we are able to see real price action, if we are able to see no price suppression happening on AMC whatsoever, then that possibility of a gamma squeeze obviously increases, and that's what we want to see. And so that is something that could potentially happen. Now, in terms of the technical analysis, in terms of the price target, you have to take a look at it from different angles. Now, we will take a look at it both from the technical analysis, but also the fundamental side of it as well. So you can see that this particular user is using the Fibonacci in terms of giving the price target of 151 and eventually minimum of 633. Now, these numbers, what we have to realize is that fundamentally AMC should be higher than where we are at right now. Can we give an exact number? Of course not. But we know and we've seen, and this isn't just said by the apes, this is said by, and you can evidently see it from institutions buying, but from other various means of using data, of using the fundamentals, you see how they talk about the undervaluation of AMC. You see the $30 valuation, you see the $50 valuation, right? There has been a massive range of price targets for AMC. One thing we do know for certain is that it shouldn't be at the $1.64 mark. But looking at this right here, it's obviously given a 151. Now, when you take a look at AMC, we do realize that 151 is something that is extremely doable for AMC. The reason why we say this is obviously because when you counter in for how much volume is actually happening for AMC, the amount of buy orders that's constantly happening for AMC. We talked about the inflow and outflows. And now, not only are we focusing on how many people are buying AMC, when you take a look at the apes, when you take a look at the institutions, the more important fact is that no one is actually selling their AMC shares. And so this is why we talked about how easily, if we are able to see real volume, if we are able to see zero dark pools, zero suppression, you can easily see AMC go up to 151. And when it goes up to 151, all these short positions that have been taken will obviously be stomped out. And that's why we can talk about it going to 633 and of course even higher. You can even see here, this is what market makers do to decrease the buying pressure and accumulation after a massive drop in the stock price. They run it 10 or 20% after to absorb the hype of buying at the bottom and accumulating more. AMC is undervalued under $30 considering it generates $5 billion. Now, essentially, we have to understand in terms of the tactics that are used by the short sellers, by these market makers. Once again, as we see them covering, as we see wherever it's the fact that these shorts are struggling with liquidity, wherever it's the fact that more and more of these institutions are buying AMC, this is just showing that the demand for AMC shares is there. And they're trying to mask it and they're trying to hide it behind things like the partnership in terms of why it's going up, because they don't want people to realize that people are in desperate need of AMC shares. Apes wants to buy AMC. Institutions wants to invest in AMC. Short sellers needs AMC shares. And this is why we talked about the inflow outflow in terms of understanding the fact that the demand for AMC shares is at a very, very big part right now. When you take a look also at in terms of what's going on within the current industry, Avatar Fire and Ash is tracking to earn 90 million to 100 million at the global box office this weekend. It's now expected to hit a whopping 1.25 billion to 1.3 billion total worldwide tomorrow. And so if you want to see the state of the box office right now, this I think is a very good representation. Now, of course, Avatar is something that is extremely big, but it shows how much money is available. It shows how big this industry can get. And people were saying that we will never see this number again. When you go back 2, 3, 4, 5 years ago, people were saying that the box office will never, ever see numbers like this. And yet here we are doing so. And more movies like Avatar will be coming out. More movies that will, potentially surpass Avatar will also come out. And so, this is something that we have to realize. And this is just talking about the potential of the box office, the potential of the industry, and more importantly, the potential of AMC. So when we talk about why institutions have been buying AMC, this here is the reason. You can see bullish signal on AMC, where institutions has added 49% more long shares in the latest quarter and now holding 291 million, which is supposedly 56 to 57% ownership, even though we know that this number is very likely to be made up of synthetic shares, as opposed to the real shares that are held by the apes, which is very, very important. Now, smart money is aggressively accumulating while price sits at 164, classic setup for potential rebound. And this is what we talked about with how they want to buy as many. We talked about the demand for AMC shares. We know that the demand is high, and we can see this from how they constantly want to buy AMC. And it is in the best interest to obviously keep the price of AMC low for the time being as they buy more. Remember, if AMC is truly a stock that should be worth 164 and lower, you wouldn't be seeing institutional ownership increasing their ownership. You wouldn't be seeing them accumulating AMC if they think that AMC is going to go lower, especially the fact when you take a look at the difference in terms of, as we see the price goes down, the institutional ownership is actually going up. So if they really think that this is a stock going and heading for bankruptcy, heading to zero, then why would they buy so much? You can see the volume that went through at the very bottom they created. It seems like that they are either covering at the lowest price possible or buying several million shares. And given how a lot of these short sellers like Citadel, like UBS, have been buying AMC, it just seems like they want to accumulate these shares to prepare for what's happening. And especially when we talked about this as well, we've shown this screenshot many times before, and it's essentially talking about the TRS strategy, where they use a basket and they use different stocks in terms of some for long, some for short, and we talked about it here. And in terms of understanding this is essentially some of the positions where they get damaged, they will then have to cover their AMC position, or they will see their AMC short position obviously fail and becomes more stressful, and they need to increase the margin requirement. And this is exactly what we're seeing with the current market. When you take a look at this here, it doesn't take too much to figure out who's in trouble on this silver short position nowadays, doesn't it? Good luck, TDS. And this is what we talked about with how more and more institutions are seemingly trying to short silver still. And they're talking about silver dropping to $40, given where it's currently at right now, especially the fact that silver price targets have been given to be above $100. You can even see another stressful weekend for naked shorts in paper silver. Physical silver is killing the manipulation game, where the difference for this is that because of all the deliveries, because of the physical silver, these guys who are trying to manipulate the market are still struggling, so they're still losing money. And then if you want to really look at how strong silver is, and going back to what we've said here with how they believe that silver is going to go to 40, they're still trying to double down on their short position. Silver has been on a extremely long run. They're on track for 9 consecutive green months, which will be the longest winning streak in history. So you can just imagine how many short sellers have been affected, have been margin called by these positions. And so when we talk about why we're suddenly seeing a surge in AMC, as we see illiquidity, as we see stress problems for these short sellers, this is the reason why. And then if you take a look at this here, what we talk about in terms of what's happening in the economy right now, in terms of all these inflated numbers, adjusted numbers that they're trying to do to show how we're in a healthy economy, yet things are overinflated, overvalued. You know, this is everything that's going on right now. And just as we've said before, AMC is the safe haven, especially at a time like this. Now, as always, known as financial advice, so do take it as a grain of salt. Make sure to do your own due diligence research, and I'll catch you guys next time.